Hi, everyone. Welcome to another episode of Finance Village. I am your host, Sheldon Bro, and of course, my co host, Sean Ediyemi. And today we're going to be talking about why the next generation of younger clients are changing their psychology about traditional banks and they're moving more towards independent advisors. Some could argue robo advisors as well, but for advisors that are really focused on that digital, holistic, client centered approach and bringing in the family and embracing collaboration, they're going to have a unique edge in not just capturing some of that growth, but I would suggest taking an entire land grab of clients from the big banks. So we're going to start a little bit about that, talking about the disenchantment that has come with the younger professionals, the younger clients, the family members that are in the millennial and Gen Z generations. Why are people becoming disenchanted with the banks, Sean? And do you agree with me that there's an opportunity for a land grab for the advisors that are focused on the right things?
Oh, there's definitely an opportunity. I saw a clever marketing maybe a month or two ago, and his marketing was like, not your parents' advisors. That was kind of like the tagline at the end or something. I don't remember what he said before that, but I just saw it ended with not your parents' advisors. I'm like, that's genius because it almost intrinsically speaks to a specific demographic and also tries to portray himself as different. Now, is there's still a lot to see whether that's actually true in terms of like what does the not your parents advisor look like. I think that the industry is changing a lot, and there are I mean, even when we think about the demographics of our industry, I think there's enough data that says probably close to more than 50% of advisors are in their retirement 65 age range, and so there is a new breed of advisors coming into play. And I think in order to be successful, we need to figure out the messaging and the marketing and how we can differentiate ourselves to this new generation, the Generation Z, the older millennials, or even some of the younger millennials, because there's enough stats that shows there's over $1 trillion of assets that are going to be moving over the next decade. And so it behooves advisors who still have a longer path in the industry, still have a 20, 30, 25, 30-year horizon for them to be able to carve out their niche and their space. And a lot of that has to do with the messaging and how we speak to this new generation of advisors. But I do agree that there is massive opportunities if you know how to tap into it.
They're not just excited about the big logo anymore. There's a lot of companies, and I've mentioned before, EQ has done some really great branding with those stars of Schitt's Creek with the father that is like loved by all the older generations,
Hmm.
and the son in that new show. Uh, and I want to make a weird analogy, as I always like to make, Sean. Think of next gen clients as like being in a toxic relationship with big banks, and it's like they're stuck dating someone who constantly talks over them, charges them for every little favor, shows up late without apologizing. They've tried to make it work. They've been loyal and patient and even overlooked a few suspicious fees on the side, but deep down
Hmm.
they know that they're not appreciated. And here comes the independent advisor that, like the friend who finally tells them, hey, you deserve better. You're not trying to break up a happy home. You're here to save them from the relationship that barely meets their needs. And you're bringing real support, genuine interest, solutions they can rely on. And if you're adopting digitally with all of the fintech that's out there, you can actually be offering them a better digital experience than their bank in a lot of situations. So they don't need someone that's always giving them kind of generic, vague insights into all these many average portals they have access to. They're ready for an advisor that's all in. So it's not a breakup; it's a rescue mission. And those younger generations are really ready for that. So
One,
some of the clever things that you're seeing advisors do to stand out, what does that look like that can differentiate from the bank and can help with that?
when I think about Questrade, and I'm not a fan of Questrade because they boil down financial advice to just simply a fee conversation, getting you the lower fees. But the reality is that the industry has changed, and a part of their messaging does speak to that and the ability for investors to be able to invest at a low cost way without all the excesses that the traditional investment firm offers and the high mutual fund fees. And so, yes, there is a part of their message that resonates with me and resonates with the newer investors who are coming of age. But they do recognize that. And so there is value to advisors differentiating themselves from the bank. Yes, a part of that conversation is lower fees, but a part of that conversation as well is communicating with clients in the way that this generation likes to communicate with. Email is still a good platform, but I'm finding that, and there's enough stats that show this, that text messaging actually works for better responses. And so finding ways to incorporate what are your clients' best ways to communicate and adopting that. I believe that advisors need to think outside the box, right? Not the generic, oh, we're gonna plan for your retirement. Because when we think about this generation, retirement still seems so far away. So when I think about clients in my demographic, I'm in my early 40s. Retirement is, yes, it's on our mind, but that's not the primary thing on our mind because it's still so far away. Advisors need to understand that there are a lot of competing needs for the average client in this demographic right now. The way we approach retirement is going to look different. For instance, looking back at the previous generation, a good chunk of retirement was their pension, was their defined benefit pension or the defined contribution pension, plus OAS, CPP, and everything else. But there's been a decline steadily over the years of defined benefit pension plans, which are the ones that give you, at retirement, you're going to get X dollars. If you've worked 25 years, you're going to get, call it $3,000, $3,500, $4,000 a month guaranteed all of your life. Defined benefit plans have been on the downward, and now they're more like defined contribution, which is your company investing, and then whatever pool you have at the end of the road is what you have. But even with that, there's also a decline generally in retirement pension plans because many are working in the gig economy. We think about the different ways and the way employment has changed a lot, right? People are finding
150% more people in the younger generations are going entrepreneurial.
Exactly. When you think about YouTubers, I wouldn't think about it. 2-3 years ago, underwriting a file, this is on the mortgage side, and the guy was a YouTuber, but he was making a lot of money.
But that's a weird thing now for the underwriters to wrap their heads
for the
around,
underwriter
right?
to understand that, like, what's a YouTuber? Like, what kind of job is that? And almost trying to help the underwriter understand that this is the reality of the workforce now. People are making money in different ways: YouTube, Instagram, paid marketing, and a lot of different ways than the traditional 9-to-5 jobs. And so it behooves advisors to learn about the different ways these investors are now earning their money and how to begin to plan for them, both to give them the best of life right now, because in reality, that's what most of them are looking for, while still planning for the future. Because retirement or financial planning historically has been more about retirement. We're going to put all this money away for the next 30 years, but not anymore. The newer generation are...
What does that retirement even look like in 20 or 30 years? It's
Which
totally different than what people are picturing and seeing that retirement looks like today.
Exactly, which I'm going to come to. But now more people are looking at the fact that I want to enjoy my life now. Yes, not maybe irresponsibly where I spend all my money, but I need to be able to balance my future goals with my present goals. And that's where you see the rise in remote working. You see the rise in people working remotely from all parts of the world, even though their employment is to a specific location. Advisors need to know how to help clients navigate that. Okay, if I'm going to live in Bali for 6 months or for 9 months of the year and I'm earning an income, how do I manage that? How do I manage my cash flow? How do I do it in a way that I'm able to sustain this lifestyle that I want, but also still plan for what retirement could potentially look like 20 years from now?
I know a number of people that are trying to look at those 6 months in this country, 6 months in that country. You know, advisors are so confident that their clients are forever loyal. And again, I'll say this stat I've said many times from Grant Hicks: the client that's been with you the longest is the easiest to be taken away from you. If you're not adopting digitally, if you're not understanding the gig economy, if you're not understanding that the younger generations want to live 6 months in Canada and be out for the winter, living somewhere else, and operating in two kind of tax situations, then it makes you wonder. In the same way, when you go to hire somebody and they don't have a LinkedIn account, it's weird.
Mm-hmm.
Why don't you have a LinkedIn account if you're taking your career seriously? This is the psychological standard that has now been set by LinkedIn. And in the same way, if somebody, I just talked to an advisor the other day that had a client that was making $1 million a year as an influencer. And, they took some very quick initiative after that first client to get very specialized in that area and to understand it. Because if somebody comes to you and you kind of look like a deer in the headlights and it's not something you're familiar with, you lose that opportunity pretty quick. And I'm willing to bet those influencers are also surrounded by a cohort of influencers there's not a lot of people specializing in that right now.
Like when I think about today's average investor, not everybody has that pension plan. I mean, looking at this graph here, you can see just in 1975, the amount of people who had pensions, defined contribution or even defined benefit pension compared to 2020, that is a lot less. Very few investors today are going to have a fixed income coming from their pension 20 years from now. And so the way we approach retirement has to be radically different in terms of how do we help them enjoy the life they want to live today? Because let's face it, they invested today, they really want to do that. Well, how do we do it in a responsible way where all our planning and advice isn't just about 20 years down the road?
Okay, so yeah, Sean, just to double down on what you said, I mean, if we want to attract younger clients, we really have to know about all of these other things. Not every advisor wants to necessarily, find all of the ways to touch base with their younger clients. They should, for those family members, for those younger generations. But if not, you can partner with somebody. One of those big things is collaborative advice. You're going to have to, if you don't want to learn about crypto, but you still want to be able to give somebody a great reason why they shouldn't, or be able to advise them properly if they do want to, because sometimes people will just make their own decisions and you still have to offer them some level of insight. Partner with somebody that does. I know firms that are doing that. They say, this is not something we want to get crazy with, but we have someone that we've met that's specialized. They can talk about crypto. And I would even say, I love when I see advisors on LinkedIn, they're talking about just trying to get retired people to spend money during the decumulation stage. I would also like to see more advisors talk to clients about investing in themselves. And that's a weird thing for me to suggest, but typically it's one of the best investments you can make. You shouldn't just be coaching me, take this money and put it into, EFTs or, mutual funds or whatever else. There should be conversations about, well, how entrepreneurial are you? How much do you want to invest in yourself? And this is what our generations and our younger generations are doing, is we want to go all in on ourselves. And of course, we want to have some level of conventional investments. And many of us, work corporate jobs and then work our side gigs, self-employment until it can sustain us. But there should be these better and these different conversations for the new generation.
When I think about some of the best clients that have been with me for 10 years or so now, part of the reason why those relationships have lasted and are so deep, and I will say my best clients, is because some of them are asking questions on entrepreneurship. I'm looking to start a business. This is my skill set. I make $200,000 a year, but I feel like there's more to what I can do. I've had questions, clients ask me, do I start as a sole proprietorship? Do I start as a corporation? And how do I begin to pick up contracts? How do I structure my taxes?
And I think that there's a lot of interesting people we can bring into the conversation. Again, that holistic collaborative future that we're looking at. How often do you think that advisors are actually talking to clients, not just about the means of what they have, but about their next level of income? We've got Chat GPT, we've got all these technologies, we've got integrations, all these softwares that can talk to each other, ways that people can take on more and do more and have more productivity than they've ever had before. Even myself, a podcast We've got the fintech company. I've got my mortgage company. That would seem like a lot to a lot of people. Well, we're living in an era where the tools are available to us if we're willing to adopt them, that we can do more. So how often do you think that advisors are having the income conversation? And there's a lot of interesting roles. We think about the conventional networking ecosystem that you can bring around a younger client, but think more futuristically, think bigger.
I mean, now that you're talking about this, one of the things that my business partner and I have been working on with the new brand that we're setting up is something called the Diamond Effect. And it is a mindset and business coaching program that becomes available to our clients in terms of, because running a business is a combination of strategy and mindset. And there are many coaches out there who give you strategy, but they don't give you mindset, or who give you mindset, but don't give you strategy. Now, imagine this as an advisor where you are now able to bring in your coach for your entrepreneurial clients and say, as we're building your plan and we're helping you figure out how do you increase your income, whether through self-employment, through the gig economy, as part of our package, we're offering you this diamond effect that gives you the coaching, call it once a month coaching for a 12-month period or once every quarter coaching to help you get your business to the next level. The successful advisors are doing it. I know a few of them on LinkedIn who are were part of the
Great
same
way to
network.
connect with that next generation too. Imagine, they
Exactly.
talk about having those more family meetings as like a, semi-annual family. There's statistics that are like huge where there's like significant increases of the success of the children when they're brought into it. If we're doing a mortgage for a client, if they got a kid that's 17 years old, why can't we just give them a one pager on kind of what that mortgage transaction looks like that their parents just went through? It doesn't mean we're divulging the parents' investments and their financial details and their debt ratio and everything else to the kids, but giving them a one pager of having a clue of this is how a mortgage works. This is something, and then offer that through the parents. Say, hey, we'd love to give this one pager that we've created for younger people so they can kind of have an idea.
And that's a great way to begin to connect with the next generation, because all of a sudden that client becomes much stickier because now you have a relationship not just with the parents, but you have a relationship with the young son, a young daughter in their early 20s or just late teens who are beginning to come into their own, and you're guiding them, or you're providing, well, by the way, this service, based on our conversation, I think your son, who you said likes um, fixing cars or something. I think this service that I offer, I'm willing to extend this service to him, and we may be able to kind of support him to get started on that journey. Now of
Imagine how many
course, that parent.
referrals you get out of that one conversation
Exactly.
because it's so uncommon.
It's
Nobody's
so
talking about it.
uncommon.
And I'm going to highlight two things that we've got releasing in Pocket Finance since you brought it up, because it's very relevant to the podcast. Number one is the perceived market value. There is a lot of stats out there that suggest that any increased engagement, even one of those cute little emails into the congested email box that everybody's doing, but anything additional that you can do, a physical newsletter, especially if you're getting into having a digital experience in a mobile app, will increase the perceived market value. Even two extra engagement points throughout the year can increase your perceived market value to the client, whether it's real or not, the perception, up to 170% more valuable. Imagine if you could wear a certain color t-shirt leaving the house every day that would make you look 170% handsomer or smarter. You'd probably be paying attention to, that's the shirt I should be wearing. And another thing that we've added into Pocket Finance recently, and if you're not going to use Pocket Finance, find a way to do this, is engage that next generation with a sense of urgency to say, hey, let me make sure that your kids know who the professionals are that you're dealing with, so that if anything ever happens to you, they're not stressed trying to go through the paperwork, trying to find out who it is. We have in Pocket Finance where you can invite your spouse to your household, but you can also invite junior members to your household where they're not seeing any of the financial items, they're seeing everybody that's on the team. In the same way, you can invite an executor so they can see everyone that's on the team. My sister went through
Exactly.
it when her grandmother passed. Nobody had a clue where any of the stuff was, the investments, the insurance. They kind of knew where she did her day-to-day banking, and it's a total mess. So you can use that urgency of protecting the situation to get those introductions and get that familiar face.
I'll give you an example of what you're talking about when it comes to even just touch points. Something as simple as, So you want to send a message to your client and you type out this email trying to explain a process or procedure. Put it on video. Just go on BombBomb or go on Loom and say, so this is what we've done with your accounts. So this is what we've noticed. This is what I'm trying to do. I hope this is helpful for you. Feel free to text me if you have any questions.
I'm a big fan of doing multiple methods. Why not have an infographic that explains the application of taking a mortgage, plus the video, plus the text? Let them choose which one they want to engage with.
Exactly. Those are things that, you know how many times I've gotten a response like, wow, I love that video you sent, because I get it. I understood it, because we couldn't connect on the phone. He's working. When he calls, I'm on the road or whatever. So I just recorded a video, did my screenshot, and I sent the video to him like, oh, thank you. That explains, I understand it. Those are little things that seem insignificant, but really tells your client that you are with the times, and makes you more referable to this generation of clients or investors that we are talking about.
And again, there's no reason not to do this really, really well, because you can go ahead and you can ramble out a whole email. Just type it any way you want. Make a mess. Type this huge one long run-on sentence that's like 3 paragraphs long, like I do sometimes. But then you can take that, put it into ChatGPT, ask it to make it consumable, compartmentalized, bulleted in a way that's going to make sense for the client. Don't put the client's confidential information in there, their names or anything, but you can put anonymous information in there and it'll chop it up for you really quick. So if you're not really good at making it consumable, tell ChatGPT to do it for you, and eventually it'll give you different formats. You can try all kinds of different formats and you'll find something that you like. But people these days, again, especially the younger generations, and it's not a defectiveness, it's just a different psychology because they're growing up in a different era. The attention span is different. I imagine that back in Neanderthal days, they could probably, they didn't have TV or anything. They probably were just fine sitting, staring at the stars for 6 hours, but people are not there anymore. So we have to find ways to captivate that next generation with the digital experience, get that multidisciplinary expertise get creative, not just the obvious ones like Sean mentioned, having a crypto person. Look at the different things that you can offer, business coach, career coach, get even more creative with it. Well, thank you for another episode, Sean. I don't know if you have any closing punchline for us for advisors on the next generation and getting that every dollar of that 80 trillion for themselves as we all pursue it.
If you can take only 2 or 3 things away from this podcast, listen to it, implement it. I can promise you, consistently do that over time, and you will see a big difference in your practice.
So we thank you for joining us, and we will see you on the next episode. We've got some huge hitters coming up in behavioral finance, law around giving financial advice, and some of the people that get in a lot of trouble with. We've got a great lawyer coming on. We've got some very big guests, and we look forward to seeing you on the next episodes. 92% of people trust referrals from people they know. But there's a better way to make those introductions. Wrap your arms around your client with your professional team. Join your client's team free today. PocketFinance.com.